Welcome to our weekly market review. It's brought to you by ETM Analytics and TreasuryONE. I'm Ilzamari Leroux. I'm coming from my home today. Cape Town traffic has forced my hand to work from home. I'm joined by TreasuryONE's currency strategist, André Cilliers. André, thank you very much for joining me again today. We'll get to some local discussions a bit later, but firstly, we're going abroad. It is the big one. It's one of the big two. It's one of the two events that we will be tracking this week. Is the latest US CPI inflation that's going to come out. Likely, we're expecting to see the disinflationary trend continue. Perhaps the same headline print, but definitely a softer core inflation that we're expecting to come out on Wednesday. What do you think?
Yes, I think firstly, good day to everybody. Everybody can see that we're in our winter woolies and a grip of winter. But at least we still have power, and we're almost entering we're close to our third week after the elections. So things are really going well here with Eskom. I think if we look at inflation, and yes, it's still on I don't want to say an elevated level, but it's sort of trotting along here at more or less the same levels, and we're expecting new data. Along with the new data, we also have to keep in mind the figures that came out last week in terms of jobs and so forth. And it was interesting that your non-farm payrolls presented us with quite a huge amount of jobs being added. Created. But now we said that the previous week that we are going into the summer season, and we can expect quite a few jobs to be created in this period in the tourism industry and so forth, but it's temporary jobs. So if you look at the more permanent situation, which is going to affect on unemployment, then we see a different picture. So there's a bit of a mixed bag, but I think this would simply say to us that we can expect inflation to remain on a sideways trajectory for the moment, albeit slightly to the lower end. We do have an upcoming Federal Reserve meeting as well. We've seen a lowering of interest rates in Europe. We can expect something most probably out of the UK. I wouldn't be surprised to see a cut in UK interest rates as well. And then the expectancy is that when the next Fed meeting takes place, only one cut is provided for in market expectations for this year. But I want to caution and say to everybody that from here on, with Europe having been moved on interest rates, with an expectancy that the UK could also move, that we have to be on the lookout and be very cautious with every Federal Reserve meeting. I am, for one, not going to be surprised if we get a surprise cut and then stability for the rest of the year. So I would go along with this one cut expected. I'm just not so sure that it takes place at the end of the year. It might be a surprise cut somewhere, and then at that level again, remaining there for quite some time before a second cuts come in. So interesting times going forward. As I say, I'm not going to be surprised if the Federal Reserve surprises us at some point.
It's surprising to look at how far we come. You know, it's been 6 months in, and we started with the 6-7 rate cut expectations. We're halfway through the year. We're down to one rate cut expectation. And quite frankly, with the mixed bag of data that we're seeing, whether you look at the non-farm payrolls, which gain jobs, and then you have the household survey, which has an unemployment rate that increased, which, by the way, we could also expect to kind of see maybe perhaps correction in the labor, in the non-farm payrolls a bit later on. They could be more reflective of where the labor market is. But for now, with the strength of where the labor market is, it gives the Federal Reserve, like I said, almost gives them the ammunition to remain on this cautious trajectory, really keeping their fingertips on the pulse to see what the economy is going to do, because that's been the fear all along, right? Is that when the cookie starts to crumble, economically speaking, it's going to crumble very quickly. It's going to be like this big snowball. So with data like this coming out from the non-farm payrolls, perhaps inflation, kind of like you said, moving sideways, it gives them the opportunity to stay more cautious, stay with their finger on the pulse. And like you said, who knows, maybe a surprise cut. I don't see it happening very soon, but we are expecting that meeting, of course, on Thursday. That will also be out, and that will give fresh direction to the markets. And speaking of fresh direction to the markets, where's the Rand heading? I'm assuming that we're still holding our breath to see how this whole government of national unity is going to play out. And this week is D-Day. So, we're expecting something to happen.
Well, I think the market wants something to happen, and the market might be expecting something to happen, but I am not going to be holding my breath on that one. I think we're going to have a parliament that opens. We're going to have a first session. We're going to have an election of a president, and I don't think any surprises is going to come up from that. And then this whole RNE government gives them the time to slowly work through the process and put things together. Once Parliament is open, once you've elected a president, then you're going to wait for an announcement on cabinet. And how that composition of the cabinet actually looks. And I think that's the one that's going to give us more of an idea of how this government of unity is going to look like. Who gets positions? What positions do they get? Who's in charge of what? And so that doesn't have to happen in 2 or 3 days after the president's been elected. So he's got a little bit of time to work through things. And what's that famous phrase from Mr. Ramaphosa is, I need to apply my mind. And he's going to take his time in applying his mind. And in that application of his mind, he's also always said that he needs to hold discussions with various parties, which is going to take place. So I'm not going to hold my breath for the next week. I think it's 2, 3, 4 weeks before we actually start getting clarity. And in the meantime, these 2 little parallel lines on our graph that keeps the Rand tightly into a band, and every time that it's jumped up to the top or the bottom, it's just jumped right back into that 2 little parallel lines. And I think they're going to remain with us for quite some time. For the next 2, 3 weeks, I think the one that we should watch more closely for any movement that can be anticipated on the Rand is not because of elections or cabinets or anything. It's more to do with a euro dollar, a pound dollar, and the dollar as such. We've seen the dollar now coming back down to the mid 107s from the 108s. It's been above 109. Watch that one closely. That will determine the path of the Rand more than what any political moves is going to determine the path of the Rand at this point in time.
The emphasis here is on it's going to move slowly. So, just be patient and let's see how everything unfolds. Andre, thank you very much for joining me this week. We will not be catching up next week. Next week's a public holiday, so I hope you have a great long weekend. And then who knows, maybe after that we will know more, understand more of the political landscape and the economic landscape going forward for 2024.
Thank you very much.